This lesson is just going to be a basic overview of the accounting equation. The accounting equation that's kind of the foundation of financial reporting. In accounting, 201 or 101 or whatever basic accounting you take, one of the first things you're going to learn is an equation, and you'll see it written typically like this. You'll see, well, let's make sure I click my layer here. You'll see A equals, you'll see L plus OE. And you'll be like, what does that mean? Why are we adding these letters, and how does L plus OE equals A? Well, A refers to assets. L refers to liabilities, or liability, if I can get this to right. And then OE refers to owners' equity. Let's say own equity, or in short, just equity. I guess shareholders' equity is another common term for it. So, like in a business, you have the business assets, the business liabilities, and then the value that's that's owned by the shareholders. This equation is very handy when we look at, and what I do with all my students is we talk about your personal balance sheet, or your personal assets liabilities equation. And again, this is the foundation of the balance sheet equation. Whenever you see a balance sheet for a business, you'll see typically assets at the top, then you'll see liabilities and owner's equity, and the liabilities and owner's equity combination should equal the assets of the company. But I kind of manipulate this equation around a little bit. We just kind of scratch out owner's equity, and we just refer to assets equals liability plus equity in the way that I break it down to my students. And I move the equation around a little bit and say we'll subtract assets, or we'll subtract liability from each side of the equation. So we'll get an equation that looks like this: just equity equals assets minus liabilities. Okay. And another term for equity, or a way to define equity, would be net worth. When looking at this from a personal standpoint, like once you take everything that you own and your assets minus what you owe, this is essentially what your net worth is. When you hear someone saying, "Well, what is your net worth?" So, for example, if you buy a house for $100,000, you put $20,000 down on it, and you took out a loan of $80,000. I guess I need dollar signs here. And you took out a loan for $80,000. Then essentially your net worth, or your equity in the home, given that the home is worth $100,000, you would have $20,000 in equity. So this is just very basic in how you would kind of calculate net worth that way. Now looking at it just in a home equation, how do you increase equity, or your equity in your home? Well, you have two ways of doing that. Essentially, if you take out a mortgage, you have the asset itself, the house, which is the value of the home. So the value if the value of the home were to increase in a market, and this being equal, where you haven't paid off your loan, and you say the value of your home went up 10%, which would just be great in this market. I guess if I could draw here, say that the value of your home went up 10%, so it went to $110,000. Again, you still owe $80,000, um, now your equity is $30,000. Right, whereas if the value of your home were to decrease 10%, went to $90,000, and you still owe 80, now your equity is just is now at $10,000. And so this is just an important equation when buying a house, or any other asset or property. So what I like to do, just for myself and for students to kind of as an exercise, is ask the question, well, what is your net worth? What is at any point in time, like a snapshot of what is your net worth, or equity. So you need to sum up all your assets. Again, I can't. Your assets, and then subtract all your liabilities. And then come up with what your worth is at the time. So, for example, some of your assets, especially for a new student or a new graduate, you may have your house. Maybe you bought a house and you got out. All right, you may have a car that's worth something now. Not what you paid for it, but what, if you were to sell it today, what would it be worth? Maybe you have stuff. You got stuff in your house. You got a bed. You got furniture. You got couches. Whatever's in your home. Maybe you have cash, and by that you have a savings account, you have a checking account, any short-term kind of things. Maybe if you own any stocks, do you have any, maybe with your job you have a 401k, right, or any other investments. So this would all kind of fall under things that you own. And then you would need to subtract anything that you owe. So maybe you had to take out a mortgage for your house. Maybe you have a loan for your car. Maybe you have some credit card debt. Or maybe you had to take out a small low interest loan to buy your stuff, your computer, your furniture for your house, or what have you. And those are typical liabilities. And one big liability for many students nowadays graduating would be your student loans. Now, one thing, the one debatable thing, and I never calculate an asset. I just look at my student loans, but appropriately you would have to to really do the true accounting of what your net worth would be. You would have an asset, which would be your degree, like in my case would be my doctorate of pharmacy and an MBA that I obtained from the University of Kentucky. I took out student loans to get those degrees, and those degrees are assets. Now, valuing those assets is the tough part. So just for simplicity, that I can't sell my degrees. Currently I can't just turn around and find the highest bidder. It's not really a tangible asset, and so I'll leave it off for this basic equation. I do know that I owe money for my student loans. So you can kind of figure out these anyone can do this pretty simply, and this will give you that that net worth value to kind of tell you where you are. And this is something that this is an important equation in just obtaining wealth and building wealth, is decreasing your liabilities, paying off your mortgage, your loans, your credit cards, and increasing the value of things like your house, your car, your whatever stuff savings, cash, 401k, and any other types of assets, maybe rental property or business that you own or whatever. And that's how you would increase your net worth. So again, real simple kind of lesson to look at. In business, we talk a lot about assets, liabilities, and equity. They're just terms that really explain some very simple concepts. So hopefully, kind of looking at it that way will help you get to that positive side of the net worth equation.